Good morning. It's October the 29th, 2015, and stocks are pointed towards a very, very strong close for the month of October. Hard to see how anybody would come in and crash the stock markets no matter what the news if you're a large institution, because your compensation is tied to how well you did this past month. Probably the same is true for fixed income. Get close to the end of the month, unless there's a major piece of news, then institutional money managers are hesitant to hit the sell buttons. We do have news today that could shake things up. GDP as expected at 1.7%. And that will be the major news focus. It was, what, 3.2 last quarter, I believe. So that's quite a drop. That number could swing things to deflator plus 1.4. Jobless claims is ratcheted down again. Right now the default number is 265. That's what is the forecast. Pending home sales plus 1%. And then natural gas inventories 70 BCF, and we're in a transition where we are starting to get heating demand, going from that period where there's really not much in the way of a cooling load nor heating demand, and then the 7-year auction. So the news focus is going to be GDP. I think jobless claims will be a part of it, will probably be lost a little bit, than pending home sales. And pending home sales can come in less than forecast if recent history is a guide. The GDP number, if it comes in lower than forecast, that'll be more support by the Fed for the market. If it comes in higher than forecast, then yesterday's hawkish statement by the Fed gains a little more strength, and the market can sell. Both markets, higher interest rates. Fed's going to raise interest rates in December, so a higher number is actually negative, a lower number is actually positive as far as GDP goes, but that's the number 1.7 that's been bandied about for I guess the last month. So I like the market today. I'd like to buy into weakness if we can. 29 to 01, thought we might be a little lower. Quite often X and Y will be the high or low of the entire session, and then 25 to 21 for buy 2. On the sell side, 7 to 11, and we're at 02 right now, and we had this spill from 4, so it might be 3s for the first trade of the day. We'll put a question mark by it. And then 15 to 19, and pretty hard to see us getting up to 15 to 19 today too without some big help from the E-mini. The E-mini crashes and goes down. That's possible, but we'll need some help from the E-mini to make it to our second sell zone. So this right here, these single prints, that's pretty good resistance. And if 12's the number, if 12 holds, we're in a B pattern. We're pointed lower because the Fed has said they can raise interest rates as early as December. Now the question is, does anybody believe them? And I don't think anybody does. Do you? I don't. You know, it's sad, but can you believe anything that comes out of the government these days? I mean, it's all a lie on the major things, the important things, and nobody wants to take a hard stand for fear of alienating a balkanized voting population. Everybody's got their hands out for something these days. It's just not a good place to be. And that's why I think that times got to get tougher before they can get better. And then the situation will force them to do what they should have been doing. Okay, we're at 23, so 16 to 20 will be our first buy zone. Pretty aggressive. And 5 to 9. And I think the 7-year brings in buyers at some point today. On the sell side, resistance is the buck. And so we've got this 27 to 31, pretty aggressive, first trade of the day. And we'll jump it up to 7 to 11 for sell 2. Focus really is the direction of the E-mini when you get right down to it. We've had no trouble blowing through our number 1 levels, either on the buy or sell side. I put them out there because if they do hold, they're near support, near resistance, and it gives us a pretty good directional clue. But if they're real easy to knock over given the volatility that we have in the 30-year these days. It is a big mover. Gold recovered, got back up to this 2-letter ledge right here. We were hoping 60 to 62 was our sell zone in the overnight session, and like the high is what, 62.30, 62.50. We'll do a W split here also. So I'm going to keep the same numbers. 60, 62 worked out pretty well last night. And 65, 67 pick up this high volume number for sell 2. The buy side, 55, 53. I think 50, 55's got a pretty good chance of holding. And the market is trying to trade lower for sure. I think 50's got a pretty good chance of holding though. Okay, currencies. The euro and yen are up. Yesterday they were down. So it's kind of like every other day in the currencies for us. Dollar is strong one day, weak the next. And both Japan and the EU want their currency lower to the dollar so they can export more to us. And our multinationals, people that do international business, etc., have said that the dollar is what is causing them problems right now, which is why they're not meeting their revenue and sales goals. I think it's a little bit more than that, but we will see. So right now we're in the same situation we were yesterday. 75 to the buck is resistance. That's going to be our sell zone. And then we'll make it 15 to 25. On the buy side, like the 25 to 15. Pretty much where we were yesterday. And then we got 50 to figure out. So 40 to 50, buy 1. 15 to 25, buy 2. Crude. Rich Genders is going to be on today. And expand your knowledge on the markets that he covers. Or try to anyway. I know sometimes that's pretty hard to do. Just kidding. Okay, London high right here is at 45.73. And London's usually a pretty good mark. So 45.75, 46, sell 1. Then letting them get stops above yesterday's highs and the Globex highs. Then 46.25 to 50 will be 2. On the buy side, 45 is pretty good support. So 45, 45 and a quarter, buy 1. Then 44 and a quarter, 44.50, buy 2. Okay, to the E-mini. We had a trend day yesterday. We had the spike. I mean, everything really went according to plan yesterday. Up into the morning tendency. Little profit taking on the FOMC announcement, and then the market came roaring back to close stronger. And you can see that the sweet spot of yesterday's activity was in the 70-75 area. We are pointed lower right now, so we'll put our first buy in the 71-66 area. Got to give it some room. We got the GDP number to get through. Then you can see the last rotate down an M period. Held right at 66. Then 60 to 65. Man, let's make it 60. This little ledge down here to start. So 60, 62 would be buy 2. I pick up this B period low. That A period low right in here. And on the sell side, 77. So 78 to 80, sell 1. 84, 86, sell 2. I think they're going to have a hard time rounding. So we're going to look for a pause day. The 65 area was 65, 67 was the breakout area. Lean against that the first time down. See if they can take it higher. Okay, so the nut news, GDP plus 1.7. Comes in higher than that, the market should sell. Deflator, no one will pay any attention to. Nobody believes that inflation is this high, except if you rent, go to the grocery store. Jobless claims 265. It'll probably be lost in the GDP news. Pending home sales plus %, that number could come in lower. And then natural gas inventories that the market won't pay attention to at 70 BCF. Going to take a bit to get everything up and posted. I'm going to get busy on that. Be back with you as soon as possible.